And we're off. Everybody, thank you for tuning in today. Agents Who Win. We are follow us on YouTube, on Facebook, on our Facebook page, Instagram. I'm here with Mike Gilb today with USA Mortgage. Mikey, thank you for being here.
Thank you.
Wanted to just kind of dive in as we wrap the year up. What does the mortgage market look like into 2021? I know we've had some crazy roller coaster stuff going on this year. You know, sales are like supposed to scale down, rates are down. So all of a sudden there's like no inventory. So people are just buying, overspending everything. And of course, an election year as well. So we're trying to figure out, like, what does 2021 look like? And I know you've got a crystal ball. So I'm going to throw a lot of questions at you, and I'm going to hold you to them the end of 2021.
Please, for sure. Todd, I think you hit the nail on the head. I mean, nobody expected 2022 to really be the way it was, and it still is. I mean, obviously the big elephant in the room, Todd, is your COVID-19. COVID unfortunately was a huge part of our life, a huge part of our industry. But it threw a huge monkey, in the wrench, and with having to adapt it with infection control and the discomfort of having people physically walking through their homes was just too much to, deter people from a lot of folks from getting their house on the market, from doing certain things. And that's ultimately, I think it's been the big thing for a few years is, the inventory. Inventory's been low for a couple of years in every market, and I'm licensed in, multiple different states, and it's not just, your Midwest, but it's your East Coast and your West Coast. We're all kind of in this together, but no, you hit the nail on the head. Definitely. This has been goofy. And I think it's only going to continue, into 2021. Now, obviously you and I know that there is this vaccination coming out, and I think that will calm, a lot of people. I can't say I'm going to be the first one to raise my hand and say, give me that vaccination.
$1,500 if you do it. Come on.
Can't say I want to be the first one in line to get that, but hopefully they can really dial it in and give people some comfort going forward, which will then enable people to feel that warmth and saying, hey, it's okay if people come in my house to get this thing on the market and really kind of go from there. So I think you hit the nail on the head.
We've got some of our sellers have been like, hey, show my house, do what you need to do. And some have been, I want you to come into with a hazmat suit on.
Of course.
And I'm like, if that's the case, we need to figure out how to get you out of your house so we can get your house sold. And
sure.
Some have physically just left. I mean, like, they're going to go stay with friends, family, go somewhere else so their house can be sold and not be there during what's going on. And everyone has their own precautions. I mean, I'm in my 40s. I feel I'm fine. I take every precaution that I can, but I didn't even know what to do in the beginning because
sure.
When we first started showing houses back at the beginning, I would put gloves on every house I'd walk into, change the gloves, go to the grocery store, change the gloves.
Sure.
And then it was like the masks, and it's like, okay, so we're okay with everything else, but we just need to have a mask on. Nobody knows, and some people we know at our age still won't even walk out of their house. If you want to drop something off, put it at the front door.
Sure.
I want to see them in about 6 months and see how much of a hermit they've become.
Yeah. And, Todd, I've also noticed that, right when the whole pandemic really hit months ago, I do a lot of business at Lake of the Ozarks here, right in the middle, smack dab in Missouri. I don't know if anybody's really seen the show Ozark with, it's a great, interesting show. It doesn't actually take place in Missouri. It takes place in Georgia. But I try to give off the persona of the lake, which it's not too true, but doing a lot of business down there. It's more of either a retirement community or, most people's second or third homes even down there. So the agents that I do work, prominently down there, they were experiencing a lot of folks from out of surrounding states that are purchasing homes without even seeing them. Really just going off Zillow, and maybe the agent would go down there and they'd be on, a FaceTime or, a Skype or something along those lines. And they're writing offers, just doing that. So it's thrown everybody for, just a loop. Everybody's life's been, turned upside down.
We pivoted our business this year. Like, I've sold sight unseen before, mostly just, hey, they're looking for this particular unit. Here it is, write the offer and send it off. And now it's like, we need to, it was like do the FaceTime showings and stuff, or Zoom or anything. And so I actually sold 2 first-time buyers their homes that were moving from other states on FaceTime. And it was interesting doing that. And they get down here, they still love the house because, like, if I want to buy something, I physically want to see it and know what I'm getting into. And so it was interesting doing that, and like how everyone had to pivot their businesses different ways for that to happen. But enough about that market. I want to kind of dive into kind of what you have going on. So, you and I have known each other for a little while. You're up in St. Louis. You're working multiple states. How does that work? Just want to talk about, like, your business a little bit, and then we'll dive into some 2021 stuff.
Sure. Really, I mean, I'm licensed right now, Florida, Missouri, Illinois, Southern Carolina, Georgia, and California. Predominantly because obviously great friend, great mentor, Steve Strick, who you are familiar with, who is and that's the team that I'm on. I'm on the Strick group, powered by USA Mortgage. Steve has really branched out into other states such as Florida. Really cultivated these wonderful relationships with other brokerages, and that's where we're kind of implementing us in their business. And I guess the beautiful part about that is we're here to help everybody's business grow. So it's not always, hey, there's a great partnership, here's my hand, gimme. We want to give back too. So it's only a win if everybody wins on this. So really, corporate is dialed in to what we're doing, what we're creating here, what we're building here. Our team is really dialed in. Steve's built our team a little bit different than I guess other lenders really have. It's really cliche when someone says, defense wins championships. Well, that's kind of the model that Steve took when he built our team, built it from the underwriters, the processors, and then the LOAs, and really getting then the LOs in here so we can handle that volume right away. And obviously there's some hiccups here and there with COVID. And it's one of those things where, we keep going back to this COVID, and I'm just sick of, it's COVID's fault. It's COVID's fault, but, unfortunately it's the world we live in, but, I think we've taken the necessary steps to not only keep our business level, but we're growing, we're taking it to the next level, and we're bringing all of our friends with us. So, we're off and running.
It's funny because, like, two words that I hate are COVID and it's the world we live in. But it's
exactly,
we're taking it to the next level is like the best word ever, because what's happening right now are people are either failing or they're succeeding beyond measures. So this is like, I don't want to say it's 2008 all over again. The way like for agents and lenders, those who couldn't survive got out, and those who survived excelled. And that's about what's happening right now, because I have agent friends who are getting out of the business because they can't figure out how to sell or get in touch with their database. And there's some of us that are having our best years ever. I mean, 20 years in this business, and I've hit my highest sales volume and my highest income this year I ever have. And personally, not team, but personally. And so it's like, how do you do that in a world that is shutting down? And it's like, God forbid, next year things change a little bit. How do I make that even better? And so,
absolutely.
Friends that are 20 years, 30 years in this business and are like, I just can't do it anymore. I mean, like, either I need to retire or I just need to go find another job or whatever. And of course, everybody in the brothers are becoming a real estate agent right now. And I think they're all coming out of the woodwork right now because the state is opening the tests up again. And so we're seeing a lot of applications for new agents coming in. Like, they want to see this get jumping on the ride like they were back in 2004 and 10. So you're being up in St. Louis, you've got partners in Illinois, Florida, and other places. How does that work, being out of state where most agents want to have a lender in their back pocket, really, and that they can walk down the hall and see? How does that work, keeping those relationships intact?
So, like I said, my team's very special, but we can't be everywhere, physically, at one time. But building the relationship, knowing and really having, I guess we're not really, what's a good word for it? I would say, the most important part of my business is earning trust. Having the, when an agent meets a client, they know, hey, right away, hey, you're going to be able to call Mike. He's going to answer. He's going to not only answer now, he's going to answer on a Sunday at 4 o'clock, 5, 7, 8 o'clock at night. When you have a panic moment, he's going to calm you down. It's really just building that trust with all the agents and all the clients. And, I guess, and, being in this business too, Todd, that, the best client is a referral. Yep. So every, and it's like making that big team. It's every time I'm on the ice or I'm on the court, I'm trying to, get more playing time. I'm trying to keep myself in front of everybody and really just, my work is my billboard. So if I do a great job, hey, we're going to use Mike again. I keep doing good jobs. Now, again, we always go back to every deal's not complete cookie cutter. So we have to think outside of the box. But, again, that's what makes us thrive is we don't just have this straight tunnel vision. We're looking right and left, up and down, on our back and, just, looking for every option, that we can to not only, make our lives easier, but, your guys and the clients as well.
Awesome. No, that's awesome. I mean, and a lot of it is primarily relationship. Doesn't matter where you are. I mean, You'll go travel to the client to see them, to say hi to the team and do all that stuff. And it's, that doesn't stop anyone. So it is almost, and ironically, we don't see anybody anymore, especially this year has been a change for that because everything's so digital now and they've made it even more digital. Even with signing documents, I don't need to be here to sign the deed or do this or do that. Because of, obviously this has helped us become more of a wireless system. I guess you can say it that way. So diving into some other stuff, USA Mortgage itself, what are some of the programs that you guys have? And I want to kind of tailor that question more on the jumbo markets, the self-employed, the creative stuff. Everybody has FHA, everybody has conventional, they all have VA. I mean, everyone has their credit thresholds there. But what do you guys do that's like special in that self-employed type jumbo market?
So, really, you can kind of go both. It doesn't always have to be, you're self-employed to be in the jumbo and everything like that. So we get some W-2 earners that are obviously doing that. But, every case or every loan, every client is very unique. So being able to obtain, the earlier that we can get documents, the earlier I can get in contact with Mr. or Mrs. said client, for the better. Let's go ahead and get them pre-approved so we know exactly what income that we're using. W-2 income is easy to calculate. Anybody who's been in a year or two should be able to calculate that in 4 or 5 minutes here, if tops. But doing the self-employment, there can be there's different schedules that go along with tax returns. In some, it's just every case is different. And one little story I want to share. It's unfortunately it's not a great story, but I think it's kind of So it wasn't a few months, and I won't say what state it is, and I won't name names. That's for sure. Yeah. I had a gal reach out, super sweet. We did the application, and I looking over the application. I always try to go over it with a fine tooth comb, and then call the client back, and then we go over it and fill in any blanks or issues they may have, and then hey, we're good to go. Well, I saw that the income was almost $300,000 a month, and I'm thinking to myself, whoa, that's great, Yeah. So I gave her a call and she said, no, that's right. I own my own business. And I'm like, that's fantastic. Great. I'm happy for the success. But after getting documentation, we were able to, send it up and, get full underwriter approval or wanting their approval for the income. Well, it turns out they wrote off so much on their taxes. We can only go off of about $35,000 for the whole year. So it's one of those things where I really just think, going back to your question, is everybody's unique. Everybody's situation is very, very unique, and getting the documentation right off the bat. So let's, I hate disappointing everybody, especially, in the 11th hour, but let's see exactly what they're able to buy, what their purchase power is. So, yeah.
Well, that happened to us. Like we are planning on, with obviously the right inventory, we want to make a move up. And so being self-employed, you have to have, certain income. Well, guess what? I'm self-employed. So what do? I have expenses. And what do those expenses do? They bring my income down. And guess what I could buy? A trailer. So
that's where she wants to
buy an RV and start traveling. But so now you've got to sit there and look at the file this year to next year. What do we need to do to put you in the position to be able to have that qualification to get to that next level where you want to go?
Sure. Yes.
So that's just a strategic planning. What do you guys have on the jumbo market? I know, or what is your forecast for the jumbo market? Because I know they really changed it this year and scaled it back. And so I'm just curious, what do you guys see happening there? Because a lot of the jumbo market for us in Florida is 500 and up. Unless you got a lot of money down, it's, you're not buying anything.
Sure. Again, hit the nail on the head, I think, Todd. And, jumbos, obviously, it's a little more riskier for investors. And due to the whole COVID, we're going to bring COVID back up again.
Right.
It seems to slide into every conversation and question we all have here. But it is more of a, it's a scare for some of these investors, and a risk, for doing that. The new conventional, we can kind of touch on that as well too. Our conventional threshold was, in 2020 was at 510, 400, which it's great. But now it's going up to, 548, 250. So now we're having that much more purchase power within the conforming limit. So not everybody's going to have to pop into that. If they're on that threshold, they're not going to have to pop into that jumbo, pricing. And, jumbo pricing isn't always as good as it was, a few years ago, because again, it's a risk. So
right.
we're going to need those better credit scores, and, the debt to income ratio is going to have to, work itself out in there as well. So for sure.
Yeah, be curious how that settles down going forward.
Mm-hmm.
So what do you see happening with really going in? I don't even know what the Fed rates are right now. How does that change into 2021? Are you expecting like first quarter, second, third quarter, like things to change, or do you still see it being smooth through 2021?
I really think, Todd, that the rates are really I think they're going to kind of stay where they're at. Just talking to some experts in the mortgage industry all over the country, having our meetings, I think they're going to kind of even out, right about that 3%, maybe a little bit less. I mean, they're obviously under 3% now still. But, like we always try to tell everybody, every lender, every broker, that everybody has fees, everybody has rates. We're going to compete, no matter what it is. It's, some people on a different day may have a better rate than we have. Well, obviously all we ask is just give me the chance to compete. And if it makes financial sense, we're going to do the deal. But at the end of the day, obviously we don't sell our business on rate or fees. We'd all be out of a job. So we're trying to sell our team on customer service. So
yeah, we're the same way. I mean, I'm not the cheapest guy in town, but we're going to give you the best service that we can. And and some people want if they want the cheapest rate, I'm going to tell you the guy's phone number right now that will sell your house for $199. Put it in MLS. You go shoot it with your iPhone, and good luck.
Sure.
You want the normal rates, good service, and exceed your expectation, and treat you like a client for life. And that's what the idea is, that you all come back to us.
I always tell everybody right off the bat, I'm not going to treat you like a client. I'm going to treat you like a friend.
Yeah.
So, and it's been going a long way. It's worked for us, wonderfully. So we'll keep going with that motto.
I mean, I've been that philosophy for 20 years, and right now I've got a house under contract that I sold 20 years ago to a client who's come back to us, and I haven't done any business with them up until 20 years ago, and just till recently. So it's like we've seen each other around the neighborhood. We still obviously conversate. I've gotten any referrals from them. That's my fault for not pushing that part of the relationship.
Sure.
But it's like they still remember my name, still remembered me, and still called us back to do the sale when the kids were moving out of the place.
Sure.
So that's good service there. Now I should have nurtured the relationship better for the referral aspects, but that was my fault.
Right.
So so there's a huge. We were talking with a foreclosure attorney earlier this week who said there's expecting 1 million foreclosures or short sales in Florida next year. What do you got? I don't even know if it's in Florida. It could be nationally, but because we've had our moratoriums with things. How do you see that playing into the markets with like just call it home prices? Is this going to keep things from going up because of lack of inventory, or will it push things down because there's more distressed sales coming to the market?
I think more distressed sales, for sure. And I don't think it's just going to be the Florida market. I think it's going to be, every market throughout the United States is going to be impacted by this, unfortunately. It's unfortunate anybody has to lose their house, but I think hopefully they can get out of it before that happens. So I think you are going to see a lot of homes that are coming for sale that are maybe even pre-foreclosure, things like that. So I think it's just one of those things that's kind of wait and see. Hopefully maybe the economy flips around a little bit and we don't have to experience that. And like I said, I never want anybody to lose their home, but I think it's hopefully. Again, I don't know if the COVID shot's going to help anybody. Again, I'm not going to be the first one on the front on the line asking for a shot. So we'll see if anybody.
Well, it's going to take people to get recovery. I mean, I was just walking in the mall yesterday. Sure. It was just shocking to see some of the stores that were closed. Even a local clothing store on our road, I drove by and I'm like, I didn't know they were gone. Hadn't needed to close there, so I hadn't gone in there to shop. But You see those small stores, shutting down, and there's those opportunities those failures are going to create new opportunities for new business to come into that space or other stuff. But I guess when we were in 08, a lot of people were losing their houses and, they want to come back to be a buyer. So let's talk about the short-term plan for those people who are losing their houses next year. They are getting a new job. Is it going to be a 7-year moratorium before they can buy again? Or are they going to put them on, yes, you've rebuilt yourself. You've got your credit back. You've got a 2-year work history. Cool. You're good to go.
Absolutely. It's really just depends on what programs are going to be available. Our non-QM, which is our non-qualifying mortgage, we don't have those up and running. Again, they were a bigger risk, so we held off on those for a little bit. I believe some, banks or credit unions are probably going to offer those, right out of foreclosure. They'll be able to purchase. FHA, really, you're typically that 3-year wait period, 2 to 3 year wait period.
Short sale or foreclosure?
Oh, foreclosure for sure.
Okay.
So yeah.
If I had to do a short sale, what is my time you would think that before I could buy something again?
You're right. You're going to be right around that same time.
Okay.
Really with us. Again, there may be some other companies out there that are doing it a little bit different. Again, more case by case, have to look at, all documentation for sure. But again, as you're going to see a lot of the non-QM products start coming back, I believe.
Okay.
I'm hoping ours comes back. We do branch it off to a third party. There's obviously, they're not always easy to obtain, but we'll definitely throw that out as an option. If we can help somebody out, we're always going to do it. What's
the thresholds for credit on a non-QM loan, or just the criteria?
I just haven't done one in a long time. I would think as far as the rate goes, you're probably going to want that at least over that 640.
Okay.
Just to be safe. The lowest we can go right now on any loan program is 600, and if you're right around that 600, it can be sticky. But that's our threshold. At this point, it was 580. COVID hits.
Yeah,
it pops up to 600. We're seeing some people that are still at 620, 640. So it's one of those things where we're all kind of hanging on, waiting to see what the industry, what everybody's going to do, and what we're allowed to do.
It's funny when you talk about the rates, what the thresholds are. We've got a national company that we do lease option stuff with, sure. And they have they shut down Orlando. They shut down everywhere buying. Obviously, they're back open now, slowly going back into certain markets. And don't quote me in the exact scores, but Tampa, Orlando, Daytona, Tampa, they were all right, we've set the scores there at 620. Orlando 600, Daytona we're going to go as low as 580. I'm what's the difference between Daytona and Tampa that you see a 40% spread on your credit score? Shouldn't it just be, okay, guys, we're open back up. Here's the credit score we need. Especially when you're within an hour and a half of each city.
Yeah, right.
What is so on the non-QM? Just as obviously it's not a exact number, but if I'm going on that market, and let's just say the average rate's 3%, what is the kind of rate that I'm going to see on that type of mortgage? Is it a point and a half higher?
You're substantially higher. The lowest one that I've ever done, and again, I haven't dabbled in a lot of them. They just don't present themselves that often where someone is qualified for that. And again, some of these non-QM products, they may be right out of foreclosure and they're wanting 20% down. Well, it's kind of a catch-22. If you just out of foreclosure, do you really have 20% to be spending on a house? Which it's rare. And the ones that I've actually done, Todd, are family members that are selling their homes to other family members and giving that gift of equity.
Yeah,
it just lines up perfectly. But going back to your question, they're not low. You're looking at the 6, 7, maybe even 8%.
Okay, so you're
on some of those. So sure.
I don't want to say double because it depends what the rates are, but you're good 2 to 4 points higher.
Absolutely. Okay. It's a drastic jump for sure.
Got it. I've got some notes here. I just want to read my own handwriting real quick and see what
of course
what to ask you.
So Todd, let me ask you a question.
Yes.
Are you going to be one of the first ones in line for this COVID-19 shot?
No.
I don't blame you. I don't know. My wife, she's a nurse practitioner actually over in Illinois. And, it's a lot of the doctors that she works with. It's about 50-50. Some are, yes, we're going to be doing this. This is great. Here's why. Some are absolutely not. And here's why. So I I may be in that second row of folks. I just don't, I really don't want to grow a third arm. Who knows what this shot entails? I don't know.
I wish the best for it because it's a good thing that's out there that's coming. It's a very quick. It happened very quickly, so I don't think there's enough research has gone into it. But either way, they had put every resource behind it because whoever creates it's going to be multi billionaires, and the stock's going to go crazy. And I wish I had extra cash just sitting around to go invest in each one of those companies and see which one skyrockets.
You and me both.
I don't follow stock markets. If I did, I would have left my money in our own company because I sold a lot of stock in our company back in May for cash flow, and it was at $15. Today it's at $67.
Oh,
4,000 shares liquidated, and I was like, I didn't own it, so I can't say I lost it. But
there you go.
It was like, but we did it because we were trying to align with what was going on, and not knowing what was going to happen. Obviously, I would have loved to have seen that. Hey, it's Christmas, guys. We're going shopping.
Of course.
Instead, that's not happening.
Right.
It's fun. So you had a lot of companies that pulled back in 2020, with just their staff and stuff, and got overwhelmed. What did USA do? I know everyone went home, to work, and a lot got laid off, but then all of a sudden everyone got busy, and then they're trying to hire again. What does that look like going into 2021? Do you still see the same amount of sales happening?
Sure. No, great question.
Yeah, I'm sorry. Give me 1 second. Sorry, because I see they need something.
Of course.
What's up? It's on the desk. What desk? Katie's, Rachel's, or Megan's. Sorry. It's in a white envelope, probably. Sorry.
Todd, great question. I mean, truthfully, I can speak on USA Mortgage and our team specifically as well. Not only right before the COVID even really introduced itself to our economy, the rates were already dipping. So we were popping refis left and right and really going through our whole entire database. So the refi game was there, and that really kept everybody from needing to lay off. We were hiring at such a rapid pace. We couldn't keep, get enough underwriters. We couldn't get enough processors. So that kind of came, and overnight, boom, the mortgage industry just went crazy. But as far as USA Mortgage going forward, I think we're a really growing company. So just for our team, we're hiring again, just for our team alone at a rapid pace. We're always hiring. I think Steve Strick, mentor of mine, my boss, he was down in Dallas, Texas a couple weeks ago, trying to develop a new way for us to do our underwriting for quicker turn time. So not only are we trying to just fill bodies in here, but we're trying to give out even better product. We're always trying to get better, which I think that keeps us, at the top of this industry. So, no, to go back to your question, I think we are consistently growing. Nobody's getting laid off here. So yeah, if you know any good underwriters or processors, send them over. We're always willing to try them out. So we're happy to be able to say we can do that.
When we came back, or not when we came back, we were supposed to fly for spring break, and when we obviously didn't get on the plane, and we're like, all this was happening, everyone's like, scale back, and I didn't let my staff go. We everyone went home, but I don't know. It was like something just went off for us where we just kept working, and I was worried that if things just stopped, I didn't want to have to let them go, and then, hey guys, we need to come back to work again. And so I'm glad it didn't have to get to that point. We actually hired more staff during, and we've doubled the size of our team in the last 3 months. We're preparing for 2021 to be a successful year. We're actually going to double again next year. Slow growth throughout the year, but doing it strategically because the opportunities are there. A lot of lenders I've spoken to are saying this is going to be a 2 to 3 year recovery. So they expect rates to be, in the threes or low for the next couple of years. It just depends on what happens with the distressed sale market. And like short sales, this is really for the agents out there. When we were in 2008, we did the short sales, those buyers were back in 12, 13, 14. So if you do have people that are short selling next year, I don't want to say it, it's a business opportunity. That's what I told my partner when she said, hey, there's going to be a million short sales next year. Cool. Great business opportunity. Let's set up another division. Let's ramp it up again.
Sure.
How to help more people. But if you're telling me it's 2 years for a buyer after they short sale, for example, it's 2 years, and they can reposition themselves, guess what? You've got another buyer pool coming back to the markets. What's going to be out there right now? Everyone wants to keep, rates are low. So I want to buy real estate and create cash flow through the rentals. So,
Agreed.
They can buy them a little distress, find the investor niche that's got cash for down payments or whatever.
Sure. Nope. I fully agree with you. And, it's one of those things too, where, the whole pandemic, you can either, kind of knock you off the rails, or you can, with tunnel vision, or you can look left and right and think outside the box and just keep your engine going. That's what we're trying to do here. Again, if it wasn't a pandemic, it would be something else. Every year is going to bring something different. And that's why we're always trying to better ourselves in case something like this does happen. We're flexible. We can do anything. We're still getting our closings done. We're still getting our underwritings done in great turn time. So it's one of those things where we're just trying to be on top of the ball here and give everybody, at the end of the day, the best customer service that our industry can offer. So that's kind of the end of our game.
Don't tell us that we're behind because of COVID. Because COVID was 9 months ago. It's still here, but it should be adjusted. We have people telling us right now we're waiting on a package to get here, and they're like, yeah, it's delayed because of COVID. I'm like, we ordered this a week ago. What do you mean you guys, this is because of COVID? I laugh when I hear the excuses now. I mean, I just like, okay, you're
fallback.
Yeah, exactly. It's like, come on. Well,
for sure.
Any other thing in your crystal ball that you want to tell us about 2021, or we can just dive into 2022 and see what happens there?
Yeah. Well, let me see here. If I can get some winning lottery numbers, I'll definitely pass them along. But I don't really think so. I think you touched on everything, perfectly. Everything I kind of wanted to speak about and kind of give everybody information. And again, a lot of these programs we talked about, they're case by case basis. So one of those things where everybody, everybody's situation is a little bit different. My goodness, who knows what 2021 is going to bring us? We're just all holding on tight to this roller coaster. But I think we're going to be ready no matter what it is, and we'll adjust our game and go from there and make sure everybody's happy.
That's what I tell my team. I'm like, as we get through this month, because it's a little chaotic, but it's not really chaotic. It's just the end of the year, and we just make it that way because we're all trying to Christmas shop and enjoy some holiday festivity. And come January, I want to be chaotic in January. So I want the chaos started now so I can crush January. And, it's like we're trying to do everything we can to put stuff together, plans and lead generation and everything to really push, business opportunities to really push into the first quarter. Because that's going to define what happens for the rest of the year for you, no matter what's going on, no matter what the rates are, no matter what the market's doing, no matter how much inventory is out there. Getting in front of the people is what's going to make you successful and keep things going forward. So, that's my 2 cents for today. Tying into what's going on the mortgage market in 2021.
Sure.
So, well, Mike, I appreciate you jumping on.
Anytime.
Great stuff. I really want to just dive in and see how we can help everyone going into next year. So, guys, everyone, appreciate you tuning in today. Follow us on Facebook, Instagram, and YouTube. You'll find us all there. Appreciate it, Mike.
Thanks, Todd. Talk soon.
Yeah, you too.
All right. Bye-bye.
Yeah.